Alright guys, welcome back to Only Divergences. Today is Monday, November 8th, and the markets have just closed. In this video, I'm doing a quick update on the S&P 500, not just because it's a Monday, but because we are finally starting to see some actual potential slowdown, which warrants starting to think about potential short entry for a minor pullback. We've been talking about this for weeks. I wasn't the most bullish, but I did not suggest going short all along here because of our analog comparisons. But now we possibly could have some technical signals that I want to go over in this video, which could outline potential for a move lower. Now, doesn't mean that the trend is breaking, it just means potential for a small pullback. If you are new here, then subscribe. But even if you don't subscribe, then just go back and watch only the last two S&P 500 videos I did, because those clearly outline what I saw happening. And in this video, we are going to get more into the details, even though this is going to be a short video. So we had this inverted head and shoulders pattern here. You can see we went to here, here's the shoulder, here's the inverted head, and here's the inverted shoulder, and then we continued on. Now, we used these two post-correction analogs. So this move right here, which was a move higher after this correction, and then this move right here, which was a move higher after this sort of correction area here. It's tough to see on the S&P because we had a lot of rotation in this area, but you could see it probably better on the NASDAQ. So what we wanted to do is see when these moves produced material pullbacks. So in this one, we can say it was here. This isn't really where you want to short anywhere. This was where you wanted to short. And then for this move, really it goes all the way here, which is quite a few months before you have something real to short. You had this, but it's really tough to call this one, and it went up right away afterwards. So remember, we talked about how we could see the S&P 500 come down to see this orange 10-day exponential moving average, and even the 20-day here, as it did in this rally here. You can see before we had this pullback, and then even here we came down to the 10, and then even to the 20 before we moved higher, and then had the pullback. So right now we're basically looking at this here and saying, look, we could get a pullback to the 10 and even to the 20, and if we are comparing this analog, it would not be fatal to the rally. Now, in my last video, we did talk about this potential for a blow-off top, and that when that happens, you don't just get one move to the 10 or to the 20 and then continue, but you cut through all of them, the 5, the 10, the 20, and sometimes you go down to the 50 all in one go. That was similar to what happened in this rally here. You see we were above all of it, and then we cut through it really quickly, and even in this one here we were above it, and then we cut through it quickly. Now, given how stretched we are, using this DMI as an indicator, given how stretched we are, I would say that unless we see material bullish potential on lower level time frames, so the 60, which we're going to take a look at in a second here, then we should just be looking for objective short entry. And if you are a subscriber, you know what objective short entry looks like, and if you don't, then subscribe. Now, remember, we are working with two sets of analogs. Okay, the first says that we will have pullbacks to the 10 and the 20, like we had here, and like we had here. But those will only be dips to buy. Notice that if we go close here, let's say we have we have a move down to the 10 tomorrow, that would be a move from where we are now down only to 463 area. That's only 1%. Now, the second set of analogs, the blow-offs, state that we have gone a little bit ahead of ourselves, which I think this rally is rather strong, and that when we actually do break this 5-day EMA, which you can see has been held for weeks and weeks, that we will cut through not just the 5 or the 10, but maybe even cut through the 20 and hit the 50. I don't see that happening right now, but again, we're just talking about two competing potential analog sets. Right now, we have two stall days. You can see these are red, but I mean, look, today actually was technically a green day, and Friday was a gap higher, even though we consolidated. So even though the candles aren't green, we still remain in an uptrend. And recall, last Wednesday and Thursday, we had the fallout from the non-announcement from the Fed. So prices already accelerated quite a lot. We are still above an upward sloping 5-day exponential moving average. But look at the DMI. Look at this red indicator and this green indicator. Look at how extremely overbought we are. This green has only been down here. Last time it was down here was, well, we had this here, which, you got a couple days of pullback. Let's just zoom in here a little bit. Yeah, you got 3 days before it resumed. And then here, which, because it was the second one, it makes it divergent. We had a pullback here, and then we had the higher low full pullback. Same thing goes, where was the last time we saw elevated green like this? Well, it was down here, right? And yes, we did have a pullback, just like we had here, but the trend continued, right? So if we assume that we are in this trending analog, then that's fine. But, if you take this green, you go all the way back, what's another place where we were there? Here, but notice that this was a lot lower, so that's good news, right? And same with the red. We were at the same level here, but here we were much higher. Now, with that said, I have to say that I am not in the camp that wants to go short right now. So rather than going deeper on the hourly, I just want to say why I think the current move is closer to the analog here, the trending analog, than the blow-off top. Now, take a look at this. Okay, so in the blow-off top examples, which we're really only using 2 of them, so this one here and this one here, notice that the MACD, yes, MACD is very high, and notice it's actually higher than where we are right now. In this one, it's at the same height, but we're going to talk about that in a second. But this one here was much higher, and notice that it was the second thrust above the midline. So in both of these examples, we'd actually been above the midline for quite some time, and therefore you can argue that the momentum of these moves was already exhausting. So to have price accelerate towards the end of an already extended trend is something that you might expect in a move that's ready to reverse very strongly. We can see that in our current example, we have just entered this area above the midline. Here you can see we've just entered it after correcting materially below it. So this is the beginning of a momentum thrust, I would argue. Now, there's one thing that I want to point out on the hourly, so let's go down to that. Okay. In the previous thrust off of the lows, so this is one big thrust before we kind of slow down. You can see price was moving higher here, then it slowed down even though price continued higher, but then price continued higher this way. Now, in this thrust, there was really only one place that you could have gone short for a nice move, right? And it was right here. The only place where you could have gone short, if you went short here when it was at 458, you could have held for a 1% fall here. That was the only real potential to go short. Now, notice that at this point you had black, which is a trend indicator, having already peaked and coming down, indicating that the trend strength was relatively less strong in this area than this area, obviously, because this was the beginning of the thrust. But then post elevation, we had this thrust here, which is kind of deviates from whatever the dominant trend happens to be at the time. And again, I'm just hypothesizing this. This is still some pretty advanced stuff, but what happened is you get a move that's out of the trend and therefore has to be resolved by going down here. So what does that mean? It means that right now I am hypothesizing that the only potential for short entry in an uptrend is when you get an elevated red DMI after the black trend indicator has peaked. Now I know that there are some things regarding second elevations. So you have this move here and then you have another move here. So the question becomes, how do you contextualize this move after a move like this, which I understand can be difficult. But I think if we are using this strict rule that I've come up with here, what I'm personally looking for, obviously, is, we assume that black is peaked here and it's coming down. What I would assume is if we get red come up here like this, right, similar to what we had here, then that indeed could be another area to go short. Now, if this is a little difficult to understand, really what you can do is you can say that, look, you want a MACD situation that's similar to this, right? So here you can see the MACD had already peaked and was rolling down, and we can make the argument that the MACD has already peaked here and is rolling down. And so if we get the MACD come up like this, I hope you guys can see this, come up like this, see here, that could be where one would want to go short. Or you can just use, low green, if green can come down here, that could be the case, or if red comes up here. Now, what I'll say is, again, I'm just studying this right now, so I want to point out potential. And I think that given this is the second thrust, we have to treat this differently than this one within this context. So, I think it is very possible that we could move, we could actually move lower, but what I'm looking for more so is, like, say we get a move lower like this, and then we come up higher and then hit a nice double top or something like this, and then we have a nice little pullback. That would be ideal. And so in terms of the S&P 500 this week, that's what I'm likely going to be looking for. There's a lot of other ideas that I'm looking at right now, but I really only want to update this at this time and outline that potential. If I don't get that, I'm not going short. I want these trades to be perfect, and I will update you later in the week. I want to get this video out right now since it's already pretty late, and maybe I'll do deeper analysis later, but I'm not going short just yet. Just looking for whether this will be, the blow-off top analog or the trending analog or some mix of the two. All right, anyways, thanks guys for watching. Remember to like and subscribe, and I'll see you Wednesday after the close. Take care, guys.